Seismic tremors are rattling the foundations of the cryptocurrency landscape. That is what industry insiders exclaimed when news broke that the United States Senate had passed the famed and hotly debated Genius Act, a piece of legislation believed by many to be the single most significant regulatory milestone for stablecoins in recent memory. Overnight, the sense of risk that had hovered like an ominous cloud over budding crypto ventures seemed to lift, replaced by a palpable surge of excitement that swept across trading floors. In one breathtaking swoop, this new measure promised to reshape the way stable digital currencies are issued, managed, and trusted. But what is truly going on behind the scenes? Why are so many people calling this moment a landmark victory for crypto? And how does it affect not only established players like Circle and Coinbase, but also new contenders such as the Bitcoin Pepe project? In this special deep dive, we are going to unravel the intricate web of politics, technology, and market sentiment that has propelled the entire stablecoin sector to fresh heights. We will analyze the loud cheers and, in some corners, whispered doubts around how this robust legislation aims to clarify the rules of stablecoin issuance. We will also chart the many ways in which such a strong legislative endorsement of digital assets might have ripple effects on meme-inspired tokens, fast-developing blockchains, and brand-new crypto projects that are raising colossal sums of money in a matter of weeks. Strap in, because we are about to decode the hype, address the pressing questions swirling around stablecoins, and reveal why so many investors are pinning their hopes on what could be the next wave of digital gold. In this episode, we will delve into all the compelling details connected to the Genius Act, from its strict reserve requirements to the calls for monthly audits, and from Circle's meteoric rise to Coinbase's unstoppable rally. We will also examine how Bitcoin Pepe, a relatively new yet confident player, might become one of the biggest beneficiaries of this wave of regulatory optimism. Are we standing on the threshold of a fresh era where stablecoins reign supreme and imaginative projects like Bitcoin Pepe combine creativity with the robust fundamentals of tried and true blockchains? And most importantly, how can ordinary crypto enthusiasts, as well as seasoned traders, leverage these developments to capitalize on emerging opportunities while steering clear of potential pitfalls? Imagine stepping back in time a few years, to an era when mere mention of digital assets in the halls of any legislature was enough to ignite controversy. The thought of a large-scale acceptance of stablecoins, or indeed any cryptocurrency, seemed distant. Governments poked and prodded, wary about an asset class that defied the classic boundaries of conventional finance. Many critics labeled stablecoins as hazardous territory, with questionable resilience in the face of market volatility. But the tides have visibly shifted. Lawmakers and regulators around the globe have started to realize that stablecoins carrying consistent value, often backed by tangible assets or fiat currency, can create economic efficiencies and spur technological innovation on a scale many never dreamed possible. Yet few predicted the United States Senate would cast a wide net of approval for stablecoins so swiftly, with the Genius Act not only passing, but also doing so by a notable margin of 68 to 30. That margin is more than a simple statistic. It symbolizes a broader sentiment that stablecoins, once regarded as mere experiments, have now gained mainstream acceptance. While the entire crypto ecosystem has welcomed the bill's passage with open arms, the effect was most strikingly visible in the stock price surges for major crypto service providers like Circle, the issuer behind the increasingly popular stablecoin known as United States Dollar Coin, and Coinbase, the largest cryptocurrency exchange in the country that shares stablecoin revenue with Circle. Circle's shares soared more than 33% in the immediate aftermath, adding renewed vigor to its valuation. Likewise, Coinbase enjoyed a 16% rally, securing its status as a top gainer among well-recognized stocks. If you are amazed at how quickly these companies rallied, you are not alone. Market watchers say this reflectiveness in share prices underlines a powerful truth. Businesses that have always relied on stablecoins for a substantial portion of revenue are now reaping the rewards of the new environment. Stablecoin-related revenue in many crypto firms jumped in the last year, as people looked for ways to escape the volatility historically affecting major cryptocurrencies. The fact that Circle saw its own shares grow 6 times since its initial public offering, soaring from a modest $31 to nearly $200, hints at how rapidly the stablecoin arena is expanding. The issuance of stablecoins aimed at bridging fiat currency with the digital domain is no longer just a wild concept. Instead, it stands as one of the pillars of the broader crypto economy. But do not just take my word for it. Many in the financial circles are calling the Genius Act a defining moment that cements the legitimacy of stablecoins in the broader marketplace. The massive wave of institutional interest that poured into stablecoins recently has only become stronger. Observers have pointed out that there can still be disagreements about the fine print of the legislation, particularly around how companies ensure full reserve backing. On top of that, monthly audits have become a critical talking point, with skeptics questioning how effectively regulators will enforce transparency. The core concept behind stablecoins is that each token is pegged to a dependable reservoir of underlying value. If stablecoin issuers are forced to operate under rigorous conditions, strengthened by frequent audits, we may see a wave of trust even from critics who previously dismissed the concept as unsustainable. So, you might ask, where does this leave Bitcoin Pepe and the countless other tokens that are springing up like wildflowers across the crypto ecosystem? Think about the unstoppable momentum that arises whenever a major legislative event confirms that digital assets are here to stay. Bitcoin, born over a decade ago, paved the way, but the success of stablecoins has paved fresh roads, leading many to explore new frontiers of token design, utility, and bridging of blockchains. Bitcoin Pepe is no mere knockoff meme token. Instead, it promises to merge the security that is historically associated with the Bitcoin blockchain with the speed and low transaction costs that blockchains like Solana champion. And apparently, the concept is resonating with investors. The numbers, expressed entirely in words, naturally, do not lie. Bitcoin Pepe's pre-sale has already exceeded $15 million, a figure that once again highlights how certain segments of the market are eager to invest in fresh ideas, especially those that promise real-world benefits. Some might wonder what precisely sets Bitcoin Pepe apart from other comedic or whimsical tokens. The development team behind it aims to show that innovating around fundamentals, such as robust security, unmatched transaction speeds, and governed liquidity, can create a token that merges the best of multiple blockchain worlds. Hype alone can spark a momentary rally, but if a token truly wants to sustain itself, it needs reliability, purpose, and a community that cares about something deeper than speculation. While Bitcoin Pepe is forging ahead with its mission, let us not forget how the broader climate triggered by the Genius Act's passage might breathe new life into projects all across the digital asset spectrum. Regulations can be the backbone that either propels a sector forward or stalls all progress. In the case of stablecoins, the Genius Act fortifies their legitimacy by mandating full reserve coverage, ensuring users that their holdings are not built on a shaky foundation. Once confidence in the underlying digital currencies grows, projects that piggyback on that trust or integrate stablecoin solutions for liquidity can see major benefits. The synergy between a stable crypto environment and a creative new token can unleash a wave of investor enthusiasm that knows few bounds. Now, we must not forget that there is another step before the Genius Act officially becomes law. The House of Representatives still needs to give the green light, and there is already talk of a comparable piece of legislation, the Stable Act, which is also under consideration. Even so, watchers in the crypto world are optimistic. Few doubt that the unstoppable train of stablecoin acceptance can be derailed at this point, with powerful players like Coinbase coordinating with Circle and presenting a unified front. The entire first half of this year saw many speculations about how a stablecoin regulation package might look, but the speed of progress has surprised even insiders who believed that policy frameworks would remain in limbo for a significantly longer period. That is not to say there are no potential storms on the horizon. If either legislative body inserts new provisions or tries to scale back certain freedoms in stablecoin issuance, the mood on crypto markets might cool, at least temporarily. Then there is a question about how auditing oversight is to be performed and by whom. Audits are a powerful tool for transparency, yet poorly managed audits can produce confusion and distrust, ironically damaging the stablecoin sphere. In this environment, the big winners in the short run appear to be people who champion stablecoins as the gateway for mainstream acceptance of all cryptocurrencies. However, some wonder if tough compliance demands could inadvertently disadvantage smaller issuers, leaving a small handful of well-capitalized giants to dominate the space. Speaking of giants, Coinbase and Circle are currently surfing on a wave of positivity. Their stock prices reflect the confidence that many feel about the stablecoin environment. Circle, as the issuer of the digital asset known widely as United States Dollar Coin, or USDC for short, has existed in the stablecoin conversation for quite some time. But its remarkable performance, growing 6 times from an initial public offering price of $31 to nearly $200, demonstrates that market participants see stablecoins as more than fleeting novelties. They see them as crucial building blocks of the future. Coinbase's partnership with Circle is also no small matter. The arrangement that splits half of the stablecoin revenue between Coinbase and Circle underscores how vital stablecoin usage is for one of the world's largest crypto exchanges. Stablecoins are not just about maintaining a stable peg. They are about fueling an entire microeconomy within the broader crypto sphere. Meanwhile, the intangible conversation around investor sentiment has bubbled to the surface with the Genius Act's passage. Many people who were previously skeptical about dabbling in digital currencies now see an organized framework taking shape. The significance of that cannot be overstated. Confidence is often ephemeral, easy to lose, but challenging to regain. In the context of digital assets, a new law that demands monthly audits sends a strong message of accountability and reliability. A significant portion of any market's ups and downs can be explained not just by underlying value, but also by the intangible effect of trust. If stablecoins are going to be widely used in trading, remittances, and everyday transactions, trust is indispensable. On the other end of the crypto spectrum sits Bitcoin Pepe, a creative concept that merges endearing meme-inspired branding with serious technological underpinnings. The pre-sale campaign has soared beyond $15 million, proving that plenty of crypto fans are willing to invest in tokens they believe can push boundaries. According to statements from the development team, the next major milestone for the BPEP token is a listing on MEXC and Bitmart, both recognized cryptocurrency exchanges that tend to boost a project's visibility. The idea is that, once BPEP is available on multiple exchanges, the token's liquidity will improve dramatically, and more people around the globe will be able to trade it easily. That, in turn, could bolster the coin's credibility. If you find the idea of bridging meme culture with robust blockchain utility fascinating, you might hit that like button right now to show your support for the innovators pushing crypto frontiers. That small gesture helps highlight these developments for other forward-looking people who share your enthusiasm. Returning to the underlying building blocks of Bitcoin Pepe, the developers claim it harnesses the security of the Bitcoin blockchain, considered by many the most battle-tested ledger in existence, and blends it with swift transactional throughput reminiscent of Solana. At a time when blockchains everywhere are being tested by huge surges in user demand, focusing on scalability and resilience is no trivial matter. The year is shaping up to be tumultuous, with some blockchains facing network congestion, while others appear well-equipped to cope with large volumes of transactions. Bitcoin Pepe's angle is to combine what it sees as the best attributes of both mature and novel architectures. Of course, any new project must face the scrutiny of a discerning public who ask, is this token built to last, or is it a fleeting mania? The leadership team for Bitcoin Pepe is counting on the promise of bridging real technological value with a brand inspired by a recognizable meme. They point out that purely speculative tokens have a history of short-lived hype, but a truly innovative hybrid can keep its community engaged for the long haul. Riding the current wave of positivity that has swept across the crypto landscape in the wake of the Genius Act, the project's supporters hope to establish momentum that positions Bitcoin Pepe as far more than a novelty. But let us not forget that stablecoins remain the big story of the moment, overshadowing even some bullish announcements. The future path of this legislation still holds twists and turns. The House of Representatives must unify behind a set of standards. If the final form of the Genius Act emerges with strong protections, as many anticipate, the crypto realm could see a further boost in confidence, especially among more risk-averse investors. Sometimes, ironically, it is robust regulation that prompts those with loads of capital to step into the space. The fear of an unregulated environment keeps high-net-worth individuals and entire institutions on the sidelines, waiting for the day they can trust the market's infrastructure. What is also intriguing is how the stablecoin market influences the behavior of big listed companies. Coinbase, for example, has publicly stated an ambitious target. It wants the United States dollar coin to become the single most used stablecoin on planet Earth. Currently, Tether's stablecoin, known widely as USDT, holds that throne in terms of market capitalization and overall recognition. Coinbase's dream might have once looked preposterous, but as USDC's presence grows and the environment for stablecoins becomes more favorable, it is no longer impossible to imagine a tremendous shift in the balance of power. Tether's own longevity and brand recognition are not easily overshadowed, but the race is definitely heating up. Observers caution that these legislative developments occurred around the same time that the Federal Reserve opted to keep interest rates unchanged, a factor that often influences crypto prices. Historically, if the Federal Reserve signaled hawkish monetary policy or raised rates, many investors favored less risky assets. By contrast, when rates remain stable, the so-called risk assets sometimes enjoy a boost. In this instance, Bitcoin was seen hovering around $105,205 before dipping slightly to $104,834.07. The fact that it held its ground can be interpreted as a sign that market participants are not particularly worried about immediate headwinds. Instead, they see the clarion call of stablecoin legislation as a net positive for the entire crypto market. Meanwhile, we would be remiss not to keep an eye on the potential pitfalls. For one thing, if stablecoins are required to hold full reserves in extremely restrictive ways, the growth many stablecoin providers anticipate might slow. Auditing, too, can be a double-edged sword. While the crypto community has consistently demanded transparency, rigorous and frequent checks can strain smaller operations that lack the resources to comply with an ever-growing maze of regulations. As with any piece of legislation, the devil is in the details, and how the final rules are enacted could either unlock extraordinary new vistas or hamper further innovation. The Senate's initial momentum behind the Genius Act is, nonetheless, building up the expectations of everyday crypto users who hope to see stablecoin usage become the norm for daily transactions and cross-border remittances. The notion that you can instantly convert fiat money into digital tokens that hold a steady value is extremely attractive, particularly in markets plagued by volatility or slow-moving financial systems. If stablecoins gain near-universal acceptance, the next question is, which tokens or projects will latch on to that stable foundation to deliver new, boundary-pushing applications? From decentralized finance protocols that require stable liquidity to NFT marketplaces that want to remove the sting of wild price fluctuations, the possibilities are staggering. Bitcoin Pepe is just one example of a project capitalizing on these bright prospects. Its pre-sale success indicates that large crowds of enthusiasts genuinely think the hybrid approach of combining Bitcoin's established security protocols with Solana's high transaction throughput is a recipe for success. The upcoming listing on MEXC and Bitmart could bring even more attention to the token, but only time will tell if this coin can sustain momentum once the pre-sale hype transitions into real-world trading. The development team is aiming for a major listing announcement on the last day of the month, so the eyes of many in the crypto community are fixed on what might happen next. On top of all this, Bitcoin Pepe's leadership has teased a special treat for current investors, a 30% token bonus. Rewards of this nature can sometimes be a double-edged sword, but in the right context, they can reinforce loyalty and help create a robust early community of holders who champion the project to new participants. It is not just about distributing more tokens, though. If a project can prove that its fundamentals align with market trends, like the broader acceptance of stablecoins, enthusiasts might cling to those tokens as a gateway to bigger things, including staking opportunities and cross-chain expansions. Should these developments intrigue you and fill you with excitement, it might be a perfect time to subscribe and follow future updates. That way, you can stay in the loop whenever fresh details about the Genius Act, Bitcoin Pepe, or any other major crypto events drop. After all, this story is still unfolding, and there is plenty more to discover on the road ahead. We started this journey with a dramatic proclamation, capturing the surprise many felt when a piece of legislation so central to the stablecoin debate passed with such a clear majority. We examined the immediate effects, including those dynamic leaps in share prices for Circle and Coinbase. We revealed how stablecoins are increasingly seen as the backbone of a new financial architecture, bridging traditional money with cutting-edge blockchain technology. We touched upon the growing excitement around tokens seeking to harness synergy among established blockchains. None exemplifies that synergy better than Bitcoin Pepe, a fresh project harnessing the rebooted wave of meme culture alongside proven blockchain fundamentals. From the unstoppable growth in presale participation to the upcoming exchange listings, everything hints at a future brimming with possibilities, especially if stablecoin regulation continues to trend in a supportive direction. But the real question is, are these developments just a short-lived frenzy, or are we on the edge of a radical transformation of the entire digital asset world? If stablecoins can sit comfortably under the protective umbrella of robust legislation, and new tokens like Bitcoin Pepe can illustrate how imaginative concepts can flourish, we might see a dynamic interplay that breaks down lingering walls, separating crypto from everyday life. The curiosity swirling around stablecoins and evolutionary tokens shows no signs of stopping. Instead, it is forging a path to a domain where regulated and recognized stablecoins serve as the stepping stones for exciting new tokens to thrive. So, as the House of Representatives gears up to vote, and as the Stable Act inches closer to the spotlight, it is safe to say that we are on the cusp of an era in which stablecoins could become as commonplace as credit cards. Projects like Bitcoin Pepe, combining elements from disparate blockchain ecosystems, stand ready to take advantage of a more secure and recognized environment. That environment, created by the Genius Act's demands for full reserve coverage and monthly transparency reports, ensures that stablecoin use cases can advance confidently, bridging the gap between the uninitiated masses and the fast-evolving crypto realm. While challenges undoubtedly lurk, the hype is far from baseless. It rests upon concrete developments, institutional buy-in, and a newly forged trust many believed would never materialize. Perhaps the best conclusion we can draw is that whenever regulation meets innovation, sparks of creativity can fly. Some rules can be limiting, but if done thoughtfully, they can also set the stage for spectacular progress. A more regulated stablecoin environment might finally calm the doubts of mainstream audiences, unleashing powerful momentum that extends beyond stablecoins alone. Enterprising enthusiasts, keen to explore tokens like Bitcoin Pepe or to ride the wave of stablecoin-based decentralized finance, will not just watch from the sidelines, they will become part of the story. Crypto enthusiasts have always been a restless bunch, perpetually in search of the next big leap forward. Today, that leap might very well be powered by the synergy of supportive legislation and the unstoppable spirit of creative projects. And if we keep our eyes open as the Genius Act competes for final approval, we might see a transformation that cements stablecoins and the tokens that stand upon their shoulders into the minds of the global audience. Could it be that in only a few years' time, we will look back at the passage of the Genius Act as the tipping point that catapulted stablecoins from niche curiosity to mainstream necessity? Stay tuned for more developments in this rapidly evolving saga. Whether you are a crypto newcomer or a veteran trader, remember that the story is still being written. No matter what happens next, the curtain has been drawn aside, and the future of stablecoins is likely to keep us on the edge of our seats for quite some time to come.